Hi, this is Daniel with Unrivaled Investing. Today, we're going to talk about FASTLY again. Just did a video earlier this week. It is now a $92 stock. It is up 15% in the last 2 days since I posted. I wanted to do a quick valuation update for any of the investors or speculators in the name because I think it's worthwhile to pencil or sharpen your pencil on what you think the company can do in the next 5 years. So that way you consider both the fundamentals as well as the valuation. Here's the disclaimer. You can read it in your own time. Before talking about FASTLY and rich valuations, the value proposition of this channel, Unrivaled Investing, is to try to find potential multi-baggers, trying to find companies with a UVP or an unrivaled value proposition. So, you can see here below several of the companies that I've talked about in the past. These are companies that I currently own for my own personal portfolio. And I'm trying to find companies that can go up hundreds or even thousands % over time because they offer something unique in the marketplace that you can't get elsewhere. When you have something special that you can't get elsewhere, generally it entitles you to future growth. That's the whole premise behind this channel. Let's find these potential multi-baggers together. So FASTLY, what are they? If you're interested sort of in terms of how I broke down FASTLY in terms of a quick, hey, if you were to look at this for the first time, how do you size it up? That was my last video. And so it's a question of let's update based on them popping 15% in the last 2 days. Why have they popped if they haven't even reported earnings yet? So why it spiked? Here's a list of their merchants, their customers. As you can tell, it's all these dominant e-commerce companies for the most part, or companies that have a significant e-commerce presence. And you see Shopify point and center right at the very top. And Shopify earlier this week announced an incredible quarter where their growth accelerated, their revenue growth accelerated to 97% year over year. Their GMV accelerated to nearly 120%. So e-commerce is rapidly accelerating. And so that means all these merchants that likely are benefiting as well, which means more demand for FASTLY services, more demand for edge computing. And if you see more demand for it, maybe they can beat expectations. Maybe they can beat even their own guidance. So let's take that. Let's take this new price. I'm rounding up to $93 a share. What's that imply? Currently, you see nearly a $9 billion company valuation. This is no longer a small cap, micro cap company. This is a full valuation, $9 billion. And you see 2019 sales. I'm throwing in different assumptions here that are better than what they guided to. I'm saying in the low case, it's 300 million, which is above 10 million above the high point of their guidance in 2020. And I'm saying maybe they do 70% growth on the high side, so 340 million. So $9 billion valuation for a company that only last year did 200 million in sales. You can see the implied forward sales multiple of somewhere between 26 and 30 times. So then, the next part is, you really need to think about what do you expect margins can be. And I talked more about that range potential and the different thoughts that go in my last video. But, I'm penciling out somewhere between 15 and 25% margins. Part of the fact is that they're currently operating at negative 20% margins. And part of it's just that structurally it's going to be lower than SaaS companies, given that it's an infrastructure company. They will have significant, CapEx, and they will have significant cost of sales. So, you have this dynamic with a margin structure where I might even be a little aggressive here, assuming 25%. Maybe the top is only 20 or 15% in terms of operating margin. And you can also see, like I'm penciling out, in addition to the growth that you see of 50 to 70%, this is this ballpark for 2020. What's the growth that you want to assume over the next 5 years on top of that? So that would get you to this range of 700 million to 1.5 billion dollars in sales potential 5 years plus. So at the end of 2020, you're looking at 2025 sales. And then, based on the margin profile that I highlight here, you're talking about somewhere around 90 million potentially in earnings to $300 million in earnings. Slap some sort of earnings multiple on it, because this company is not going to be growing at 70% a year for the future. I mean, keep in mind, they only grew top line 38% in the first quarter. Now, I shouldn't say only 38% is great, but if you're priced at 30 times sales, it's pretty lofty. And so, I'm slapping on an earnings multiple somewhere between 20 and 30 times. keep in mind, this is 2025. You're talking 5 years out. Maybe 5 years out, they're only growing at 30%, or maybe they're only growing at 20%. And, if you're only growing at 20%, maybe it makes sense to throw on a 20 times multiple for something like that. And so you can see what the implied valuation gets you, looking at these multiples. So you're talking about 1.8 billion on the low side. And keep in mind, some of these low scenarios are actually, I've assumed some aggressive assumptions to get you here. So this is really like, if you're an investor, I would really think hard about what am I assuming this company does in the next 5 years. Now, it's one thing to say like, hey, I'm a speculator and I'm sort of playing the greater fool theory that someone's just going to pay more. But if you're planning on being a long-term investor, you might want to think to yourself, what are the underlying assumptions that I'm underwriting here? Because my, sort of this base case here is showing 50% downside. So are you assuming that their long-term margin profit, profile is closer to 30%? Do you assume that, that their sales growth is going to be more than 3x in these next years? And I'm already, that's on top of assuming that they do 300 million in sales this year. So those are the questions that I'd want to answer. Feel free to comment, because I'd love to hear your perspective, because it would certainly be a variant perception from what I sort of think, because the risk reward profile here strikes me as really, not compelling, even if you were assuming the high scenario plays out. That shows only 3%, upside. Of course, it could go way higher than that. People can assume crazy multiples on things in the short term. But I'm personally and you can all follow my personal financial journey, but I'm trying to find companies that I can just sit and hold for long periods of time, but also recognize that sometimes some companies go nowhere for years, even decades, because the valuation gets so rich. So you can go to unrivaledinvesting.com to see my personal financial journey. And thank you so much for watching. If you enjoy looking for potential multi-baggers, hit that like button. And if you want to learn about the next multi-bagger that I'm going to talk about, hit that subscribe button. Thank you.